Let's look at the oil price today. Brent crude oil trading over in London about $80 a barrel. Then the price of West Texas Intermediate, a little over $69. And, speaking of West Texas, I was there back in August visiting some of the rigs in the Permian Basin as we look at pictures of those now. And at the time, some of the workers there were telling us they believed that the oil they were pumping in Texas would make us safer. So with questions about what we're going to do about Saudi Arabia, will those workers be proven right? We bring Stephen Schork in, the editor of the Schork Report, to talk about this. Stephen, it's good to see you. And is there anything to that, the idea that there's so much oil coming out of our own country that maybe it can be used as leverage in this back and forth with Saudi Arabia?
Well, I'm not sure about leverage, but certainly stability. And I think that's what everyone in the market really wants to see. These spikes from 75 down to 25, back up to 75 now, it doesn't do anyone good, especially from an investment standpoint and certainly from a consumer standpoint. So now that the United States certainly is an exporter, and in fact, prior to this summer, the state of Texas alone was exporting more crude oil than it was importing. Pretty remarkable phenomena. So certainly it's adding stability to the market, and stability does, I think you can make an argument that stability does equal a safer environment.
It is interesting. By the way, it'd be helpful if we could get more of that oil out of that area. It's been bottlenecked for so long because of pipeline issues. Now, all of this overseas seems to come back, right, to what's going to be happening and already happening in Iran. Production is already down. Exports from Iran down 700,000 barrels a day since May. The expectation is it could fall much more than that as these new sanctions go into place. So how do you see things playing out? Because that's obviously a big part of the Saudi Arabia story.
No, wait a minute. Iran, the sanction oil, they're taking oil off the market? Oh, that's right. That story's been out for about 5 months now. So the market has had 5 months now to adjust to that news. And in fact, when we came around to this past August, crude oil demand here in the United States has never been stronger, and yet global supplies of oil were at an all-time high, and OPEC's supply of oil was at a 9-month high because of increased output out of Saudi Arabia, Libya, Nigeria, and Iraq, compensated for an already material loss in production out of Iran, plus a material loss of production coming out of Venezuela. What we're now seeing today are short-term fundamentals compensating for the global geopolitical narrative. That is to say, you cannot swing a cat now in the United States without hitting a barrel of oil. That's how much oil we've added to the market over the last 3 weeks. So I do believe this has been priced in.
So that's interesting. So as a bottom line, Stephen, of all the conversation we've had here over the last few minutes, how much do we really need Saudi Arabia? Because to listen to the president and others, we really do need them when it comes to oil and other things. But maybe you're hinting at the fact that it's not as big of a need as it's been made out to be, or?
Well, no, I don't want to
go too far,
undercut the importance of Saudi Arabia. It's certainly important. But the point here is that Saudi Arabia, just like Iran, just like Venezuela, they need us more than we need them. That is to say, when your only major export is one single commodity, you are completely married to that commodity. So certainly you are going to do what you can to keep that market as stable and as well supplied as possible. And we just heard last week, BP came out and said they think oil prices in that $75 to $80 range is too high. I would tend to agree with BP. That is to say, the only person who likes oil prices at $80 and above is Elon Musk. Of course, now we have substitutes to the market, and the likes of every oil producer out there, that's their biggest fear: maintain market share. It's much easier to do that at 60, 65 oil than it is at 80, 85 oil.
Fair enough. Great analysis as always, Stephen. Thank you. Good to see you, Stephen Schork.